Good morning, traders. So how do we trade the Aussie today? So first things first, you'll notice that ichimoku is not on the charts at the moment, and what we do have is a pretty simple moving average strategy together with a Bollinger Band. So as we go through the charts, I'll explain how this works, but the setup is pretty much a Bollinger Band, which is the green, and a 5 moving average, which is this blue color. Okay, then obviously the 200 EMA is still on here, and the oscillators are, as per usual, 2 stochastics and a MACD. Okay, so pretty much this trend here, and I can extend it to pretty much there. So we've had 1, 2, 3, 4 touches on this trend line. So it's a pretty strong trend, and it's an upward trend which is pretty much intact. Okay, so this is still intact for now, and from my perspective, is we should be looking for longs off here for a bounce back to the top of the channel, and the channel is pretty much something like that. Okay, and then there is obviously another one which will be like that. Okay, so this is the broad channel that we have at the moment. Let's get down to the daily quickly. So okay, we're missing a bit of data here with the rollover of the contracts, of the futures contracts yesterday, but the levels are pretty much the same. Okay, so what I'm expecting here is that's a level that we need to watch for. Okay, and there is another level we need to watch for here, which is down there. So these two levels are pretty important. We break through those levels, and we've got this daily gap, which will come into play. You'll notice how the oscillators are rolling over, and they've rolled over very nicely. And what we're looking for is more than likely, I would say, a consolidation bar on the daily for today. I can't see buyers stepping in on a Friday. I might be wrong, but probably a bit more sideways action, which will allow the oscillators to move further to the downside and group nicely. Okay. Okay, so the one thing that is giving you kind of a bearish outlook is these two rejection bars off the 200-day moving average. So that does give you an indication that there is some selling pressure here. But I'm going to go with this long-term trend line, and we are pretty close to it. And for me, I'm looking for longs. I can't look for a short when we're close to a long-term trend line like that. Okay, so let's get the 4 hour and just see what's cooking. Okay, again, you can see quite a bit of data missing here, but the levels are intact. So these are the levels here that I'm looking for. There is another swing low here, but that will line up with this level here. So nothing much to read into it. Again, you can see a double rejection off the 200 moving average here. Okay, and we're starting to get a 200 and a 20 moving average crossover. It hasn't happened yet, but we're starting to get it. Why that's important, let me rephrase why it's important. It's important to the upside, because when it does happen to the upside, it indicates that there's a change in direction and we're moving to the upside. Okay, when it happens on the higher time frame to the downside, you can see it happened here. The move to the downside normally, especially on the Aussie, is kind of short-lived. This is the one area where we had 6 months where we stayed below it, and the market moved to the downside. Okay, so that can happen, and we can get into a bear market and move to the downside, but typically it's short-lived. Okay, and especially based on the trend that we have at the moment. Okay, so let's just get that back there. Sorry, we want one there, and we want one there. Okay, so there's something to watch for. If we stay below the 200 and we break this channel, then you can start looking for a more long-term downtrend. But for now, trend is up and we're looking for longs. Okay. All right. So what we do have in play is this double bottom at the moment, and I just want to highlight this level that I pointed out yesterday, which was this Brooks gap here. If you'd taken that trade yesterday, it would have been short-lived. Okay, so there it is there. That's the Brooks gap there. But so you would have, sorry, let's just do this properly. So that the hour Brooks gap was further down, but your 12-minute Brooks gap was there. So that would have been your entry, and that would have given you a good 350 odd points. Okay, so it was a worthwhile trade, but it didn't stay in place for long. Right, let's just get back to the hour. And there's a few things here. So firstly, I see we have a potential double bottom. Okay, and this double bottom was in play from yesterday, but it is just intensified. We also have a falling wedge in place, and it's quite a nice, well-defined falling wedge. So we're looking for a break and a retest of the wedge line in order for us to come and test the 200 moving average on the hour. Okay, so I want to take, let's just put a new level in here. Okay, so what we have here is a double top potential, okay, and we did break through the bottom of the double top, so it's up, down, up, so there's the bottom. So we do still have a, let's call it around 600 points. So we do have a double top in play that could target this area here, so this blue line here. Okay, just get rid of that for now. So we do have a double top in play that still targets this area. So what could happen here is this wedge could move like this. Okay. So a wedge could move like that and come and target this area here still. And that would give us a measured move for this double top. So what I'm looking for is, I'm looking for longs, and I'm looking for longs somewhere in this area. Okay, so as soon as we see some bullish price action, that's pretty much what we will be looking for. Okay, now I just want to touch on the crossover, moving average crossover strategy quickly. You can see when the 5 crosses over the 20 and price stays below the 20 moving average, your trend is down. Okay, when we cross over, the trend is typically up. Now on the higher time frames, it helps you stay in the trend longer. So on the hour, you can see you would have caught this quite nicely and stayed in it for quite a while. And this would have been pretty much a 2,000 point trade that you could have had. Okay, on the lower time frames, like the 6 minutes or even the 3 minutes, if you want to scalp the 3 minute, it allows you to get into the swings. Okay, so you can see here yesterday's open would have had a nice trade to the upside, and always to a level. Okay, always have your levels drawn in, and you can see this was the level on the hour, and that's where you draw your levels in, on the hour. You see a rejection bar or fit, you're in short, and you can add on the break, well, over here. Okay, and then back to a level. You can see there's a level, and then it gets a bit choppy here, which makes it difficult. But typically in the beginning of the day, you've got at least 2 or 3 moves that you can trade like this. And 3 minutes even clearer. You can see how it functions on the 3 minutes. Okay. Right, so the 12 minutes, so just on the 12 minutes, you can see inside bar, engulfing bar. So we have a potential reversal pattern here on the lower time frames inside the wedge. Okay, so I am looking for longs and it'll be somewhere in this area at the open. So that's my view on the Aussie. Hope it helps, and enjoy the Friday, and I'll catch up with you guys on Monday. Cheers now.